Skandinavische Nebenwerte haben in den letzten 4 Jahren eine Achterbahnfahrt erlebt. Während der Corona-Pandemie glänzten diese Unternehmen mit toller Performance. Seitdem ist die Luft etwas raus. Doch die nordischen Staaten gehören weiterhin zu der wirtschaftlich stärksten Region Europas. Lohnt sich also jetzt ein Blick auf die skandinavischen Nebenwerte? Im Interview haben wir dazu Markus Larsson, CEO und Portfolio-Manager bei Fondita, einer Investmentboutique aus Helsinki, und er gibt uns im Interview Einblicke und seine Einschätzung zur aktuellen Situation und die Perspektiven der skandinavischen Unternehmen. Markus, in the last quarter of 2023, the Scandinavian small cap recovered significantly from their annual lows. The start of this year was rather sideways to downwards. What's going on the stock market in Scandinavia?
Yes, hello, Thomas. Thank you for the opportunity. If you look at the stock markets in the Nordics during the last or the fourth quarter, what actually happened was that then the expectation of lower interest rate was quite strongly there, and we immediately saw a very strong reaction on the small caps and the micro cap side, which after a long underperformance started to perform, and they did that very strongly. Then again, coming into this year, we saw that the interest rates are probably not going to take place already in the spring, probably in the summer, and that has led to a situation where the sort of risk off was again the topic. So thereby small caps have underperformed and being rather flat during the beginning of the year. Then again, if you look at the large caps in the Nordics, looking at the biggest company in Europe nowadays, Novo Nordisk is up almost 30%. Bringing a fantastic performance for the Danish large caps, and in Sweden we see the big industrials performing really strongly. So you have still a very big difference between the performance in the large and the small cap space. And if you want to look at it a little bit from a longer perspective, and I have here shown a chart for more than 20 years, then actually we see that now is the second time in 20 years when you have such a big underperformance for the small and micro cap space that it's really something unique in that respect. It's worse than in the financial crisis basically. So it's really been a tough period during the last 2 or 3 years for the small caps. So I think there is some potential for coming back as we see interest rates coming a little bit down.
In general, you are in direct contact with the companies. Has the situation of the companies actually gotten worse again, or is it only the reason what you say now?
I think the reason is what I said before. Well, I think I met like 200 companies during the last 12 months or so, and I don't think we get the message that is actually becoming worse. Yes, I think there is some destocking still going on in some sectors, but I think the companies are talking about we are at the bottom right now, and it doesn't get really worse, and the expectation is clearly that we will see a better second half of the year. So, but of course, in construction there is still some pressure, and it might take some time to get back. But also in that sector, we are starting to see some small improvements, and that's also reflected in the consumer confidence. So overall, I think we rather see some green shoots here and there, or beginning to see them, but and which point to the fact that we should see a better situation going into the summer and the autumn.
If you look at the prices profiles, especially for small caps, must have collapsed significantly in the last 2 years. Is there any truth to it?
If you look at the performance of the profits, I think that we had a positive development during 2022, but in 23 it turned around for small caps, especially I think, and depended a little bit on the size and the company's financial positions. I think the profits were down like 10 to 20%. And if you look at it, at where does it come from? I mean, usually small caps are very dependent on financing, and the relative share of a result in a small cap, the financial net is clearly higher. The financial costs are clearly higher of the total result. And we have seen now that the interest rates have risen, especially in the Nordics, on the mortgage side and so on, that many companies have had a situation where their financial costs have doubled or tripled during the last year or so, and that has of course had a huge impact on the company's profits.
Do you have some examples of companies?
Well, if you look at we are now talking about a couple of companies that we have in our portfolio in the microcap, and if you look at, for instance, on Advice, it's a small, interesting life science company who has grown with acquisitions, and of course, one of the component there has been debt financing, and given that the fact that the interest rates have risen, we have seen of course their costs going up, but still the company has managed to grow the results tremendously during the last years. But it's been a really volatile journey as the share price has jumped up and down. But of course, looking at from a couple of years perspective, the performance is still very good, and and I think they will continue to show a good development going forward as well. Another example of quite a tough ride is a company called Hexatronic, who is involved in fiber solutions, and demand there is very much driven by the fact that fiber is taking over old copper networks, and then there are some supports from the government. But here, this stock was the best performer in the Nordics during 2022, and since then it's been a rough ride. The hedge funds have been hunting this one. The markets have been weaker, but still the profile of growth is there. I mean, of course, we will have a weaker year now for this time, but then there is some subsidies coming up again and the market will recover. But the stock has gone from PE 30 to less than 10, so I think there's quite a big recovery potential when things turn around and we see a little bit lower interest rate and things get going again in the economy. Then we have a couple of other examples, looking at where you have had a quite good performance. And here is an example that Envipco, who is making the bottle machines, when you go to the store and leave your bottle, there is legislation coming up that in Europe you need to take your bottle to the store, and it needs to be recycled. And this company is a runner-up for Tomra, who is the majority market shareholder in this market. And now when Envipco has started to really get volumes and coming from being a small player, and it has started to pay off, and they are sort of getting the volumes now. And really interesting story, still a very cheap stock, and you have all the big driver behind them. And as my last example, I like this company very much. Tobii Dynavox is working with handicapped people who need communication assistance, and they're doing it via the eye tracking technology. And there are 2 million people in this world who get help only when 50 million people need it. So you have a very good long-term story of a company here to benefit from that trend, that people need and will get more help in the future.
So now we see some examples that runs good and some that runs in the past not perfect. But let's move to your fund and your strategy. What is your current focus in the small and micro cap strategies?
Well, of course, you have had a very tough period, and it's been really frustrating to see that with many good companies who are sort of delivering, and the focus is not there from the investors, and it's been really flow driven during the last years. The Nordics, there has been sell-offs of international investors have left the scene in the Nordics. There's been a selling pressure, but now beginning from the end of last year, there was the first time we saw some inflows in the market and in the small cap market, and that was sort of the starting point, in my opinion, of a recovery. And it comes from the interest rate, that the risk sentiment improves, and that's what we need in the market. So we, of course, are looking at in our portfolios of very we look at it from a thematic perspective of companies who are benefiting from structurally growing markets in healthcare and in digitalization and so on. But of course, there are now many companies who are so beaten in the consumer space, for instance, that there are very interesting opportunities in many companies to look at the sound companies with good balance sheets and who are just depressed because of the current environment, and there are very many companies who are at really low valuations right now. I mean, we talk about the valuation gap that is also record high against the large cap. So when things start to melt up and the interest rates start to come lower, I think that will be the trigger for the small caps. And we saw it in the autumn. It happened really fast. I think we had a performance of our small cap funds of close to 30% in a couple of months when things start moving. So this discrepancy between the large caps and small cap is not sustainable, in my opinion. So I think as a long-term investor, it's definitely time now to start looking at this asset category.
Markus, thank you very much for your time and detailed insight into Scandinavia.
Thank you very much, Thomas.
Das war's zum Interview zu den skandinavischen Nebenwerten. Wenn Sie auf dem Laufenden gehalten werden wollen und noch nicht die H1 Akademie abonniert haben, dann machen Sie es. Somit werden Sie sofort benachrichtigt, wenn ein neues Video eingespielt wird. Dankeschön für Ihre Zeit und bis bald in den kommenden Videos. Ihr Thomas Polach. Tschüss.